So with that, I am humbled to introduce our first speaker this morning, Mr. Dean Miller, President and CEO of the Philadelphia Alliance for Capital and Technologies. So, thank you.
Thank you very much. All right, we have the Alexa of public speaking here. It's going to tell me how much time I have. If I don't pay attention to somebody's going to have to. That means 20 minutes left. This means 4. This means sit down now. I want to first also recognize Tim and Lou for what you've built. When I came here several years ago for the first time, I was blown away by what you have established up here and continue to build. So please, another round of applause for what they're doing here. All right, I get to kick it off to talk about venture capital. How many people in this room think that there's enough venture capital for biotechnology? I do. There you go. So I would say that there is a lot of capital. We oftentimes think of business as local, right? Biotechnology in Doylestown, biotechnology in southeastern PA, biotechnology in Pennsylvania. But oftentimes we also sometimes make the mistake and say that capital is local. And there is local capital, not much, we're going to talk about that. But capital is much more portable than the local assets that get established here from a biotechnology place. So I want to help broaden your view of capital a little bit and what the art of the possible is. So again, I'm Dean Miller, the President and CEO of PACT. How many of you have heard the organization PACT? So we've been around for 10 years, and I'm going to quickly go through just to give you an overview and tell you what we're up to, but really focus on the capital piece. So we're backed by a lot of different organizations across technology, healthcare, life sciences. Our mission really is to be a go-to resource for those entrepreneurial companies. And we think of the entrepreneurs as the center of our ecosystem. So surrounded by those investors, corporations, we just heard from government. We'll talk about that a little bit because that's an important piece. And for us, it's about 3 core pillars. Capital, again, that's all about this morning. Talent, and customers, and customer relationships and partnerships. And as you know, we put on a host of different programs and events over the course of the year, actually 35 plus, really to interconnect the community. And I'm just going to highlight one that's not capital associated that you should all know about. In partnership with Ben Franklin 3+ years ago, including my partner in crime, Tony Green, right over here, we launched a program called Mentor Connect. How many of you have heard of Mentor Connect? Okay, so Mentor Connect is a scalable, sustainable model for mentorship of the next generation entrepreneur across industry. Whether you're biotechnology, med device, software, it doesn't matter. What we do, and this is free of charge for both Ben Franklin portfolio companies and PACT member companies, is provide a team of experienced, successful CEO founders to that less experienced entrepreneur, anywhere from 2 to 5. It's a program that now has grown to close to 90 mentors, over 80 mentees, and we've had close to 300 mentor sessions. A mentor session is a 90-minute session with your team. So this isn't your board, it's not your investment group. This is the group you can go to and say, I really need advice. I just don't know what I'm supposed to do here. And it's become a really powerful program for this whole region. Again, staying in this whole region. So we're really excited to be partners with Ben Franklin on this, and again, just wanted to touch upon that. One other thing, we're going to talk about capital, and we do a lot beyond just events and programs, and one of those, again, another one in partnership with Ben Franklin, was Innovate in PA. This is a bill that we put together and literally brought with Ben Franklin to the state legislature about 3.5, 4+ years ago, and got passed. It was a $100 million deal. Half of that money went to Ben Franklin statewide to increase their investment ability. The other half went to a fund of funds that went to early stage venture across PA. A lot of that actually in southeastern PA. And we want to do more of that. So we're talking to people like the state senator and representative along with Ben Franklin and others. So let me get to the capital piece. This is what we're here to talk about. And I'm going to talk about in focus is on venture capital. Now remember that can span a large range from angel investment through growth stage venture capital. What I'm not going to talk about too much is the public markets. I'm also not going to talk about what would typically be defined as called private equity or late stage investors. These would be the Deerfields of the world that are not inside the data that I'm going to show you. okay, the pre-public investors in biotech. I'm not going to talk about that. So I'm going to start off with the punchline. So what's the punchline? There's been growth in early stage, and we've seen a little bit of flattening. Now, it's not just Pennsylvania or southeastern PA, that's nationally. So we've seen a little bit of that. In general, we punch below our weight. We punch below our weight when it comes to the size of our geography and economy compared to the amount of venture capital. However, it's been improving. Third, life sciences, big driver. Big driver, I don't need to tell anybody in the room that's a big driver, but I will tell you on a relative basis, it's a big driver compared nationally to statistics. I'll show you that. And seed stage is the most challenged. So I will proffer that capital is portable, but at the seed stage, it's most important for it to be local. Ben Franklin, again, a close partner of ours, a couple colleagues in the room, yeah, as you know, they've been terrific supporters of entrepreneurs. And not to give you a commercial, just for Ben Franklin, we're going to touch upon venture in a whole host of areas, but they established I think it's 5 years ago, the VC for VC fund with Bucks County. And it's now funded 16 companies, leveraging $64 million in capital with the creation of 550 jobs. And they have more money to invest across, by the way, not just biotechnology, which has been a big recipient of that, but beyond that as well. And if you're interested, obviously see Tony Green over here or Jason Vanden back there. But it is critical, that funding is critical to our region, to our state. And when we're spending time in Harrisburg, we focus on that seed stage, particularly with Ben Franklin, angel capital, and early stage venture. What about local venture firms? Well, actually, that's probably the most depressing news. But we are a big importer of capital, and it's only increasing. So where does U.S. deal activity compare? Now, these are 2019 numbers, and by the way, you pointed out Crunchbase is okay, but PitchBook's a little bit better. And so this is PitchBook data. And this shows you through 3 quarters for 2019, so it's not total apples to apples. I kind of say, okay, well, that's going in the right direction, but look at 2018. Look at that big pop in the number of dollars that went out in 2018. Anybody want to proffer a guess what the largest investment in 2018 was? Single largest investment. I'm not talking about dollars, actually, the company that received it. How about Juul? Juul, over $15 billion. That's, that's actually a little scary number. So, again, U.S. deal activity has been, since the Great Recession, has been steadily increasing, but you see that little flattening. So what about Philadelphia? Now, we don't have 3 quarter 19 data here from a PitchBook perspective, but I can tell you that we're in the middle of, through 3 quarters, our best year ever. And we'll wait to see what the data shows through the 4th quarter, but I would fully expect to see not a continued flattening, but a little bit of a spike in terms of Philadelphia MSA data. For those of you not familiar, the metropolitan central area also includes southern New Jersey, northern Delaware. That's how we get really graded from a capital statistical perspective. So good continued flow, but again, a little bit of flattening. What about sectors from a U.S. perspective? Now, you have to be able to see this, but I'm going to point it out. Okay, software is this black box down here. This little thing right there is pharma biotech. That's national. So software dwarfs biotech nationally. That's the takeaway when you look at that slide. Software dwarfs biotech. Now, let's think about U.S. activity in life sciences. Where is it headed? It's actually growing. So we can say pretty candidly here that southeastern PA, this region, has been a huge strong point in the pharma and biopharma space for a long period of time. But I will tell you that the rest of the country is starting to catch up in different pockets, right? So that growth is huge, all U.S. growth in life sciences with a little bit less of a flattening. So it's a positive direction. Now what about Philadelphia, MSA, biotech by sector? You can see this a little bit easier. Software is still number 1, by the way, and that's at the top of the box versus the bottom of the last one I showed you, that blue box. But right below it, up to there, is pharma biotech. Much different scene in Philadelphia than the rest of the country. Very, oh yeah, right. So this right here is a much bigger portion of of Philadelphia MSA than the rest of the country. Shows you the relative strength. This is an important sector. We all know it's an important sector for all that it does, but this is a big piece of Philadelphia's VC and investment scene. And then you got a bunch of other sectors, but software and biotech, that's it. The rest of the country, it's primarily software. All right, how do we rank? So I've been in the venture business for 20 plus years, and when I first got into business, Philadelphia was actually somewhere in the teens nationally in terms of MSAs. Now, how big are we? Fifth, sixth largest region MSA in the country? We should be at least in the top 10. Well, in 2018, for the first time, I'd say first time, we landed in the top 10. Now, this isn't by dollars invested. This is in terms of number of deals, which is a much more accurate way to consistently track your investment activity. And the reason why is because you have jewels that happen on a regular basis that completely skew the numbers in terms of dollars. So when we see venture activity, we do it in numbers of deals that close in a year, okay? And I will tell you that 10 years ago, we were hanging around 100 deals a year, about 100 deals a year. And now we have grown into the 200 deal a year category and are starting to increase in pop. Now you can see who's ahead of us, right? And some of these areas ahead of us are not that far ahead of us. So there's much more proximity in 10 through 6, certainly than there is 1 through 5. But we are on the front page. That is the takeaway here. We are on the front page and growing in the right direction. And from a relative basis, I would expect that to continue given a lot of what's going on in biotech, in addition to other areas. All right, deals by stage. So this looks at angel, early VC, and later VC. And the takeaway that I want you to take away from here is angel seed, what we talked about. This was angel seed 10 plus years ago. It was last place, okay? And this is in terms of both dollars, you can see here, and the numbers of transactions. And it has steadily risen over the course, with a little bit of dip in the past 2 years, okay, to be our most prominent source in terms of number of deals. There are more deals getting done at seed early stage than there were certainly 10, 12 years ago. That's really important because if you're thinking of a community and you're thinking of whether you're biotech or tech, you have to have a significant number of early stage investments take place to then build, right? Because you got a high failure rate. So if you can have a significant number of transactions happening at this angel seed space to serve as a feeder, to serve as a pipeline, then you're going to build a stronger foundation of venture investment activity, which is what we're seeing today. And this, by the way, includes angels, angel groups. I see Mr. Howard Lubert in the back is going to talk a little bit later. It includes Ben Franklin. It includes a host of different transactions. You still need the early, still need the late stage, but really 10 years ago, those were leading versus the angel activity that was taking place. By the way, will we have time for questions at the end? I think so, yes. All right. All right. Unique investors in Philadelphia. This is to talk about the portability of capital. So for seed and early stage, you really need more local capital. And we can talk about some of the finer points of that. But Philadelphia is a net importer of capital to the tune of about 80% of our capital. And you might hear that number and say, that's really bad. I would tell you that's not a bad thing, because capital is portable. And the fact that we are where we are, quite accessible. So you heard our state representative talk about the proximity where we sit to Newark and Philadelphia, thinking about us traveling out. Well, think about capital traveling in. We're in a very good place for that. It is very easy for capital, not just around the United States, but around the world. You're going to hear from next from an individual who's going to tell you about some capital coming from Asia to find us here. And that is happening on an increasing basis. This slide just looks at two areas. It looks at investors in New York and it looks at investors in the Bay Area. These are, by the way, unique investors that are doing deals in Philadelphia. You can see it's kind of all over, right? These are, by the way, the reason that I included Philadelphia, New York, and the Bay Area is those are the top 3 in terms of geographies where the capital is coming from. And if you look at this 2018 number, you can see a big spike in the participation of Bay Area investors. Now, that could be an anomaly, but I would proffer to you that there is more knowledge and awareness of Philadelphia as an opportunity area for venture investors. And it's not just venture, it's private equity, it's the later stage. 2 weeks ago, I spent a bunch of time with some folks from Warburg Pincus, who are not even 60 miles to the north, sitting in Manhattan, but haven't spent a ton of time down here. But now they have dedicated people that are spending more time in our region looking for opportunities. And they're not the only ones. There is a significant amount of interest given some of the things that are going on in the biotechnology space, in the cell and gene therapy space, and generally in the biopharmaceutical space. So that importability of capital is a key success factor to our future. What about corporate? So this data does follow corporate, and you see that moving up to the right. Now, much smaller numbers of transactions, and dollar-wise a smaller piece of it, but a growing piece of it. So you see here in 2018, we hit a high water mark all time of $800 million of corporate transactions in our market, in the Philadelphia MSA. So this has been looked at, certainly from the biopharma space, as a key factor. And these are traditional investments, right, from corporate venture arms. They don't count all those business development deals, that get done, which are significant as well. So an important piece, again, of the ecosystem when you think about biopharma. What about exits? I just put this up here not really to tell a story, because you can see that this story is a bipolar story of highs and lows. It does show you that there is not a consistency, as we have seen from a capital perspective, when applied to the exit world. And that tells you as an entrepreneur that you always need to be raising money, because you don't know when the exit's going to come. We have been very fortunate, and one of the pieces of data, if you look at this, that I expect to fully change, I expected it to fully change in 2019. Sitting here on November 15th, I'm not sure, it was Spark Therapeutics. That might be a 2020 number at this point in time, when it actually gets closed. But that is going to be one that has a huge impact on this chart. But there are others as well. There have been a host, as you know, of successful IPOs from the market just this year. So again, the takeaway here is you can't predict from an exit, from an investment volume perspective, when those exits are going to come. Hence, always raising capital. So what about those VC fundraising numbers? I told you it was the most depressing data, and I didn't lie. It is down to the right. This is capital raised by venture capital firms in the Philadelphia MSA by year. Now, it doesn't include the New Springs of the world, the LLRs of the world that get counted as private equity. This is pure play venture capital. And that is a really low number. There has not been a significant amount of capital raised since arguably the Great Recession by venture firms based in Philadelphia. When I first got into this business, I affectionately referred to them as the Princeton Mafia. There was a group of a half a dozen plus biopharma-focused investors that managed well over several $1 billion that have all but gone. Now, they fed a lot of their capital to this local MSA market, and we saw the rise of a number of other different investors as well. But when it comes to biopharma, that, sitting where I sit, is the most concerning for this. You might say, well, what about technology? What about some of these other areas? I'm actually less concerned about that for a couple reasons. One, it's a lot cheaper to build a tech company early on. You don't need as much capital. You need more capital in the biopharma space. And as I said before, for that seed and early stage, you need more local capital. So there needs to be more done. And I know certainly Lou and Tim, along with our partner Vlad, are looking to launch the Bio Hatch Fund, which would be a tremendous asset for our region, and there's other initiatives as well to help feed that. But this is a chart of everything that I showed you that needs to change, in particular on the biopharma space. What about top deals? So a little bit of an eye chart, but this is actually 12 years of data. And I put this up here because it's very descriptive of where our strengths are in terms of large deals, right? You don't see a lot of tech companies up here. They're all healthcare, 80% of them. And the reason why is it ain't cheap to develop a drug. And so these are great success stories, and we've only seen that continue. So 2019, one of the reasons we're having our best year ever is this group of companies up here, again, dominated by the healthcare sector, particularly in the biopharmaceutical space. We have some great assets here. There is no doubt about it. And by the way, capital, local capital from an early stage, or the lack thereof, isn't going to hold us back. And the reason why is because of that portability of capital. I spent a lot of time talking about, thinking about, in partnership with organizations like the city, like Bucks County, like our counties, like our airport, Ben Franklin, and others, thinking about the visibility of Philadelphia. And Philadelphia, as a region, we think pretty highly of where we sit. Who thinks highly of Philadelphia as a region? All right. Well, we need to tell our story better. Because the rest of the world doesn't really know us. What do you think the top 3 things the rest of the world knows Philadelphia? Rocky, cheesesteaks, Liberty Bell. All right? Actually, Santa Claus isn't even on their radar. And if you go to Australia, they actually think Philadelphia cream cheese would make that top. So we got to tell the story better, and there is a growing group of organizations and individuals helping to do just that in something called the Philadelphia Global Identity Project, which is all about a common narrative. It's not designed to replace what this great organization is doing, or the PCBB or Select Greater Philadelphia, but to help augment a common narrative for Philadelphia. And by the way, this industry is a huge part of that story. And so we've been thinking about, working on, and helping to guide and fund an effort so that the rest of, forget about the country, the rest of the world, but yes, the country, but we all as well. Because you've got many colleagues, friends, and associates who aren't in this industry who don't actually know the incredible strength that exists here. So we're doing that, and I'm here to tell you that we're starting to get on the map. So when we started this work a couple years ago, there was a new report that came out of an organization called Business of Cities. And it's an organization based over in London that worked globally with JLL, the big real estate company, to produce an assessment of the top 80 cities in the world. And they classified them. And I'm going to show you a map in a second. Some of them will be really obvious, like the big ones, the top cities in the world are in the center, and then as you go out to the wings are the less top cities, but still obviously very prominent if you're thinking about the top 80. Philadelphia was not on that original list. We are not on that original list anywhere to be found. And you would look at that list and say, wait a minute, what about, compared to this city, compared to that city? As a result of all of your collective work, and a lot of work to raise awareness of what's going on in Philadelphia, we're on the map now. So this just came out 6 weeks ago, and as you can see, Philadelphia is not just on the map, and here's, by the way, the big 7, and here's the established world cities contenders. So we need to move this way, but we're in the section of innovators. And why is that important to this group? It's important to this group because the innovators piece, our strength, and what landed us on this map for the first time are the following. Our university, and in particular life sciences assets, and our talent. That's the reason we're on that list. So those are huge strengths that we have that contribute, obviously, to this world we're talking about today, the biopharmaceutical world. And we're really excited to help to tell that story, but we need help to do it. So the last thing I'll leave you with is this. As entrepreneurs, as investors, tell the story. Tell your story of Philadelphia, tell your colleagues' stories. Don't stop raising capital, and recognize that capital can be found in a multitude of places. You're going to hear about some more of them here this morning. And despite some of those negative charts that you saw there, there is a lot of positive momentum. And so thank you.
All right, thank you.
Yeah.
We have time for one question. Going
A
once,
lot of pressure.
going twice.
I have a question. So one of the slides showed 20, sort of a dip relative to what it was C dropping down and early VC going up to crossover. There it is. So what's the percentage of these that are follow-on relative to this?
I don't have that data handy, but you can make a pretty good argument from, it depends on if it's tech or if it's biopharma. What gets done here on a seed becomes an early stage within the next 12 to 36 months after that. So that's kind of how it generally goes. Depends on the industry.
Yeah. Great. Well, thank you, Dave.